Hi, welcome to this video day. It's 13th of November. It is 7:30 p.m. GMT. We're going to be looking at a trade setup today, which we think has got fantastic risk to reward on it. It's AUD JPY. We looked at it last week. We also looked at CAD JPY with it. We thought both the AUD and the CAD would be going lower on the JPY. CAD hasn't really broke down yet. I still think it will, but that setup is really kind of pending. AUD JPY, in our view, is now confirming a big move to the downside. And we think this trade has got, fantastic risk to reward potential. And I did say at the weekend, the one currency I'm just so bullish of at the moment is the yen. I'm just bullish on every major currency, okay? A lot of people have said to me, well, yeah, everyone says it's bearish. Well, yes, they do. But if you look at the price action is confirming the yen is getting ready for a big move across the board. If you look at it on a basket of currencies, it's already hammered the emerging markets. So take a look at, for example, the MXN and the TRY. Next currencies that are going down, I think, are going to be the commodity currencies, particularly the Aussie, because it's the proxy major risk currency. And then it's going to push the USD and the Euro down, which we did that video at the weekend on both pairs. And if you look at the news and you read the media, all you see is how bearish the yen is, okay? They're doing stimulus, okay? That's bearish. Well, it's in the price. Also, it's holding its own on most majors now. It's not going lower. Also, stimulus is going to get cut back, in my view. Mr. Trump has been in Japan, subtly calling Japan a currency manipulator, which they are, of course. They're basically using a massive stimulus program, okay, which is basically designed to give them a competitive advantage. They're even manipulating the long end of the yield curve. That cannot continue. The reason it cannot continue is if you look at inflation now, it's on the rise in Japan. The Tankan report shows tightening of business conditions. They cannot justify stimulus at the levels it is without hinting that they're going to cut it back, pretty shortly. Now, in terms of them doing this, if they don't do it, they risk a trade war with the US, for example. My own view is, just take a look at what happened with the euro when, basically you saw a little bit of uptick in inflation and economic activity. The market assumed that the ECB would have to reduce stimulus. They haven't confirmed it then. Basically, the euro went on 1,000 pip rally. The same's going to happen in the yen, and the yen rally could be even bigger. Why? Because Japan is doing the biggest stimulus relative to GDP of any country ever. Okay. Now, I think the bearish fundamentals in terms of stimulus priced in. Also, you're already starting to see a move to risk off. It's starting already. Well, where is it then? You might be saying stock markets look really bullish. Well, money is already flowing out of emerging markets. Okay, it's not big yet, but if you get a big move to risk off, the yen will basically soar. I like currencies basically where everyone is really bearish and the price action is not confirming it. So the yen is not going down at all. It's holding its own on most majors. It's pushed a few down. It's already hit the emerging markets hard. I just feel yen is the currency to focus on. And if we look at the CFTC net traders report, the commercials, the smart money hedgers are basically building up big long positions in the yen. So I feel that basically, having an exposure to yen longs, as position trades could really yield some fantastic profits in the months ahead. And if I'm wrong, which obviously I could be, I don't think the risk is too much. Now, in terms of AUD JPY, let's take a look at it. I want to look at the monthly chart first, because it really shows the profit potential. Then we'll draw some levels on the daily chart of entry, stop and target. Right, monthly chart
Right,
first.
we are on the Australian dollar against Japanese yen monthly chart. I just want to really see the big picture before we get to the daily chart and just identify some key levels. We can also see the long-term profit potential as well as the shorter-term profit potential from this chart. Now, we take the Aussie dollar, 2008 obviously had that big fall in the crisis, rallied strongly up into early 2013, and that's been the peak. We came down a bit, another rally up 2014. Then we set off on a nice decline to the downside and then bounce back up. And I think you've got a channel. 89 is the top of the channel, 78 the bottom, with 82 a more minor level of support in between. And if we look at what happened here over the last 5 months, okay, stock market's out now, bullish. Normally, the Aussie, it's the proxy risk currency, should be going higher with stock markets. It hasn't gone higher, okay? The yen should be going lower, hasn't really gone lower. What you've got effectively is we had this, tail here, this poke above, tried to take it out, it failed, and now we're coming off. I personally do not think the Aussie dollar will close above 89. It won't see those levels for a long, long time. Yeah, if we look at the COT divergence, big commercial selling, I'll give you the levels in a moment, but that easily points to a move to 82 and a possible run on to 78. We're below 87 at the moment. So basically, you're looking at near enough 900 pips as a possible decline. Okay, now we do know also that obviously the yen is the major safe haven currency. We just saw what it did here, pushing the Aussie down. What if we get a move to risk off? Okay, now will we get one? I don't know is the honest answer. I thought we'd get one by now. I'm sure one is coming. Okay, that's going to give the yen an additional boost. Okay, if you look at the stock markets, they're detached from reality. They have been for a while. But what's interesting is investors, and they're most bullish about stocks ever. Volatility is just so low, which points to complacency. Yeah, if stock markets have a really big correction, you'll see the Aussie go down to 62, in my view. Now, that is just an additional, let's call it a bonus of doing this trade. It could happen, okay? If it does, this trade could turn into a massive profit opportunity, okay? Just feel that, the yen, it's just confirming now that it's going to firm up and push the Aussie lower. Now let's go and look at where we are on the daily chart and draw some AUD Japanese yen daily chart. And in terms of the monthly chart, we've already set quite ambitious targets. I'm now going to just go through timing your entry and your stop and so forth on this chart. Now, we did do a video on the AUD JPY, and we were saying we expected it to break down. This was last week, okay? And we noted the COT divergence, the COT net traders positions. Now, if you're unfamiliar with them, fantastic tool. You can click on our mailing list or click on the link beneath this video to join our mailing list, and we'll send you more details. But just in brief here, what we want to do is watch for divergence between large speculators and commercials. It's the commercials who are the smart money hedgers. They're great at warning of trend changes and helping to basically project ambitious targets. And we can see large speculators 5.74 to 1 in terms of their long positions over their shorts. So bullish. Commercial 7.92 to 1 in terms of shorts over longs. Okay, so very bearish. Divergence 13.65. Any divergence above 10 in a currency pair is of interest to us, okay, in terms of trading, because you're going to get some, or normally we'll get some movement in favor of the commercials. And when you use COT net traders, you see the chart in a completely different way. For example, when we came up here, speculators buying heavily, commercials selling heavily. we had a COT divergence of 16, so slightly bigger than we've got now. We're just going to sell it back through 89.50. Okay, from a technical perspective, you might not do that. Okay, when you've got the COT report behind you, you're confident of doing it. And we got a decent trade. It was a couple of hundred pips. And saying in the last video, our latest trade is in at 87.35. And we're up here testing the 20-day moving average, which we thought would provide resistance. And you can see we poke above it, come back through it. These pokes are kind of half-hearted on the tails. They just can't get through the 20-day moving average. We're expecting it to provide resistance, and it does. And we were saying, yeah, just come in below the round number. Okay, so through 87. Okay, now in terms of someone was saying to me, well, if you're already short at 87.30, why don't I come in at 87.30? Why bother waiting for the break of the round number? And this is a good question because, yeah, we're cushioned by one trade anyway. We're seeing it as part of the same trade, really. If you're coming in fresh, get the high odds entry, and I think that's through the round number. Okay, obviously, if you came in at 87.30, that would be better now because obviously we're through the round number. But that's hindsight, okay? And what we like to do in our videos is always give like specific levels. Yeah, a lot of people give all these vague levels, like if it goes down, sell it, or if it goes up, buy it, and then they're suddenly right. They don't have to place, well, they don't, an entry, a stop, and a target. Okay, so it's kind of the real world of Forex trading, if that makes sense. Now, we were saying through 87, 86, 80, or 70, just get it clear of the round number. We've now gone down from the 20-day moving average. Okay, so I think that is now going to provide good resistance. We've got a diagonal line there, and if we go through these three tails, okay, lines up with the 20. Okay, now obviously we're looking for 82 on the downside. You basically got to, yeah, follow the trade as it unfolds, because obviously, yeah, it's my view right now, can change in line with the market conditions. So where would you put your stop? Well, you could put it close at 87.80 back from this 20-day moving average, or if you're really, really bearish, you can go back at 88.35. I don't think this double top is going to get taken out. Your 20-day moving average, plus this down sloping trend line as well, it's going to be very difficult, in my view, for the Aussie to rally back with the type of divergence we've got on the COT. I don't rule us, yeah, going back to 87.40, something like that. But I think, yeah, you can see we're just losing momentum away from the 20-day moving average. We've tried to hurdle it. We can't. Now, this divergence, I've said, is still really big. So you're going to get, at some point, a stop run. I think some stops have obviously been taken, but speculators are going to bail out, in my view. From a pure technical perspective, you might see that level of support, but yeah, I wouldn't, because you're going to get a stop run. Okay, sorry, I can't get my line straight. You're going to get a stop run. So you're looking for a good few hundred pips to the downside, at least. Yeah, we put 82 as the first target. There is another level of support in between. Okay, so I would say 84. So that's easily on the cards in our view. 82, then 78. If we get big move to risk off, then the yen is going to push the Aussie way, way lower. I like the look of this trade. I think it's decent risk reward. Yeah, we're very bullish of the yen, as I've said, and the Aussie is the proxy risk currency. I just got a feeling it's going to get hit hard. So from our perspective, this looks a decent trade. We shall see how it goes, and I'll be updating it in future videos. So thank you very much for watching me as usual. Take care. Have a good day.